Hey, welcome back, guys. It's Dan from Pekoe Mortgages, and today we're going to do a little bit of a weekly roundup. There's been a lot going on in the last few weeks, and as we hit February now, we're starting to see some movement in interest rates and a little bit more as far as predictions go on what might be on the horizon. So let's just jump into today. This story from stories.com actually caught my attention here on fixed mortgage rates. So you may have noticed, if you've been paying attention on interest rates, especially in the last 6 months or so, we've seen some fluctuation, and it's been all over the news. Predictions on where interest rates are going to go, specifically the fixed rate mortgages. And fixed rate mortgages have been predominantly the most popular type of mortgage here in Canada, but that's actually starting to change now. So this story basically states that RBC believes that before the end of the year, so before our year is out, we will see possibly the Bank of Canada raising interest rates by up to 100 basis points. So before anyone starts freaking out, what does 100 basis points mean? Well, that is 1%. So we could possibly see our interest rates rising by 1%. And that's according to a report from RBC Economics here. It got me thinking, actually, where are we this week on interest rates? Where have they fallen at the end of the week? And what is that compared to historical rates? So let's take a look here. I'm going to show a little chart here that I've pulled up, and this is, you can find this as well too. It's on the Bank of Canada website, so I can actually leave a link below if you're interested in checking this out a little bit more. A few things kind of strike me on this. Bond yields are up, and if you look at the chart here that I'm showing, the 5-year bond yield, which dictates where fixed rate mortgages are and where they're going, hit a 3-year high today. It actually closed at 1.81. And so, you know, this is a little concerning because obviously that means fixed rate mortgages are likely to follow as far as rates go. So I've got a little section here that I've marked here, 1.81. That was the Government of Canada benchmark bond yield for 5 years. And if you see, that was February 21st, 2019. So we're talking almost exactly 3 years ago. And we are right back at it, closing out today at 1.81. I thought if we went back into a time machine and jumped into February of 2019, what were rates like in 2019? So I did a little bit of digging and took a look at what I was doing back in 2019 regarding interest rates. And I've got here a couple that I want to share. So the first one here is the average 5-year fixed. And when I say HR, that just means high ratio. So if you guys have ever seen on a rate shopping website or rate comparison website, there will be a series of interest rates. 9 out of 10 times those interest rates are related to high ratio mortgages. So what's a high ratio mortgage? Simply put, it's one where you're putting less than 20% down. So you require that mortgage insurance through CMHC, Sagen, or Canada Guarantee, and you get a little bit lower rates. So those are the lowest rates out there. And you can see back in February of 2019, a 5-year fix was 3.79. And if you want to jump on any rate comparison website as of today, take a look what the average rate was. It's definitely lower than that right now. A few things here. The average 5-year variable rate was also higher at 3.1%. So we're seeing on average about prime minus 85 basis points. And prime is actually floating. So today, prime sits much lower than it did in 2019. In fact, in 2019, the Bank of Canada prime rate was sitting at 3.95%. So your discount was always based off of the prime rate at that time. So the average prime rate was prime minus 85 basis points, which turned out to be 3.1%. And again, if you take a look at today's rates, you'll be surprised to see where they're at. If we go a little bit further too, guys, if you are getting a mortgage, you're likely going to be subject to the stress test, or the what we call in the industry, we actually have an acronym for it, MQR. It's your mortgage qualifying rate, aka stress test. And back then it was sitting actually higher at 5.34%. What does that mean? Well, back in 2019, you could have gotten a rate of 3.79 that would have been competitive, or 3.1. However, you had to qualify on the higher rate of 5.34%. So even though you were getting that lower rate, you had to qualify as if that interest rate was 5.34%. Let's fast forward. Let's jump into a time machine and head on over to today, February. So what are rates doing right now as we close out the week? So if we go back into that chart that we saw, that chart showed with the Bank of Canada that we had a spike. And in fact, if you look back all the way to the beginning of this year, we started to see an upwards trajectory on the interest rate. So today, it closing at 1.81. It takes a little bit of time for those rates to catch up, and you'll start seeing them at your local bank. Today, though, I did a little bit of comparison shopping myself. And again, we're going to stick with the 5-year fixed, but our 5-year fixed high ratio came in at 2.69%. And this is on average out there. The average variable rate is 1.25%. What do we got going on here, guys? Well, there's a few things. The Bank of Canada prime rate today is sitting at 2.45%. So that is a lot lower than we were seeing just 3 years ago at 3.95%. So our discounts are always tied to that prime rate. Interest rates on the variable side are sitting much lower at 1.25%. The 5-year fixed rate today at 2.69% on average is 1.1% lower than we saw 3 years ago. So guys, often they'll get folks calling me up saying that interest rates are increasing. And, in this market, they definitely are. But if we just go back a few short years, we can see that when we're comparing 3 years ago versus today, there's been a substantial drop in interest rates, both fixed and variable. And when that happens, typically there's nowhere for the interest rates to go but up. And also I want to point out here, today's stress test is actually 5.25%, so we're 9 basis points lower than we were back in 2019 at 5.34%. What that means is, even though it's a small dip, your money can go a little bit further, or your household income, when it comes to qualifying for a mortgage. So we've got a couple things going on right now. We have interest rates that are below what we saw 3 years ago when that 5-year bond yield was sitting at 1.81%. My guess here is that these rates are going to start climbing. We might see them closer to what we saw 3 years ago. So my advice here, guys, is if you can, take advantage of the lower interest rates and reach out to a mortgage broker. If you've got a renewal coming up, let's say in the next 90 or 120 days, and you want to lock something in today, you can. And that might be a good idea in order to hedge against the increasing interest rates. And again, I would encourage you guys to click that link below, that Bank of Canada link there, and you can actually check and monitor and track these rates yourself and get a little bit more of an idea of where interest rates might be going. Take a look at that trend chart. Anyway, that's what I got today, guys. I hope you're having a great day. And I think I might start doing this where every end of the week, we just kind of take a look and see where interest rates are at, because it's really important in this market. We're getting into the spring market. There's more active listings. There are a lot more buyers out there. And one thing you want to make sure you're aware of is what's going on with the interest rates. And that really boils down to how much you're going to be paying on a mortgage. So thanks again, guys, for checking in. As always, like, comment, subscribe if you haven't, and I will see you on the next video. Take care.